What awaits the housing market for 2022? Is the long-awaited housing crash finally going to happen? Are house prices going down? In today's video, we'll talk about the expectations for the housing market in the year 2022. This will help out the buyers or sellers to take advantage of the opportunity. We'll cover the topics on what the first and second quarter of the year will bring in the spring to summer market. We'll dive into that with more detail. Before we get into it though, kindly hit like and subscribe. We're going to see a shift this year. However, if you're watching this video because you want to hear that there's going to be a great market crash, we're sad to burst your bubble. But if you're a housing crash enthusiast, we recommend you to finish this video until the end. We'll explain why this isn't realistic and possible at the time. Firstly, we need to understand supply and demand. The only time a housing crash can actually happen is if the supply exceeds the need for buyers to purchase homes. These recent years, we've seen lesser inventories on a national scale than we do buyer demand. Though buyer demand is driven by low interest rates, an increase in supply is still a requirement. You need a greater deal of supply than buyer demand to alter the fundamentals of the housing market. For a crash to actually happen, you need a lot of supply. This crash doesn't happen overnight. It takes weeks, months, and even years to build. Honestly, we're a long way from that. However, we're on the brink of a change that will significantly affect housing prices. As of this month, we're closing out the year with around 6 million total units sold in the United States. This is the highest number ever recorded in quite some time. This is because of the strong spring, fall, and winter markets that happened in the recent years. This winter market is probably the strongest closing for this year. Typically, this is the time of the year when buyers put things on hold or when things go slow. But this year proved itself to be a little different. Now, a lot of people think that interest rates are about to increase, and due to this, they plan on taking advantage of the market. Because of this, they end up purchasing property. This helped the fall-winter market become the most significant and strong one on the real estate record. However, as we enter 2022, things are about to change. The year is going to end at the lowest levels of inventory that we've witnessed all year round. This isn't really the time of year when people put their homes in the market. As of January 1st, you're not going to see an instant shift in the housing market. It takes a couple weeks for people to get over the holidays to get back on action. Though others already planned this out, many out there are still contemplating. You will see a shift in the market around February. February will be the start of the spring selling season. This is the time of the year when things start heating up. The biggest sales happen at this time period, and this is when people get the most amount of money for their homes. Even though more properties are available as the spring home buying season heats up, there are also more people looking to buy, creating fierce competition and pushing prices skyward. While the inventory picture is expected to improve in 2022, it isn't expected to perk up by much. Inventory will remain limited and grow only by 0.3% in 2022. The greatest factor I see affecting the 2022 housing market is the low inventory, said Paulo Prieto, a Compass agent in Orange County, California. While inventory remains low, buyers will become more accustomed to the lack of choices and will continue to aggressively compete to purchase homes. As long as that happens, prices will continue to go up. While we won't see the double-digit gains that were made in the past year, prices are expected to keep rising in 2022 at a slightly more moderate pace. Experts expect the housing market and broader economy to normalize next year as the Fed tries to tame inflation. However, 2022 will almost be identical to 2021. Though we are not going to see the appreciation numbers that we witnessed in 2021, we're going to see a very strong market. Why? This is because interest rates are still going to remain low. So what's the Fed currently doing about the situation? The Federal Reserve will most likely start to tiptoe into the unknown before the end of the year. The Fed said that they're going to start tapering bond purchases. The bond purchases have added more than $4 trillion to the Fed's balance sheet, which now stands at $8.5 trillion, about $7 trillion of which is the assets bought up through the Fed's quantitative easing program, according to the central bank's data. The purchases have helped keep interest rates low, provided support to markets that malfunctioned badly at the start of the pandemic crisis, and coincided with a powerful run for the stock market. Though the market took this news well, there's a challenge ahead. Tapering means you should be ready for future rate hikes. A number of major organizations tried to predict where interest rates will end up. Many have predicted that this year interest rates will be at 4%, but actually it will be 3/4%. This is considerably lower than what others have predicted. However, when the Fed stops tapering those bond purchases and starts to raise short-term rates, buyer demand will most likely be affected. This won't happen in the first quarter of the year though. Interest rates are going to remain low, which will provide buyers with the same amount of purchasing power. Any buyer who's been planning to buy a property is going to get another shot as more and more inventory starts to enter the market in spring. Naturally, we'll see a pickup in inventory. This will create a strong spring market. Moving on, in the summer, bond purchases start to taper and short-term rates will rise along with interest rates. This will affect home buyers' affordability. Inventory on the lower price points might gradually build up until the second half of next year. According to CNN, the US housing market had a white-hot year in 2021. Home sales are on track to reach the highest level in 15 years, with an estimated 6 million homes sold in 2021. But whether you benefited from this surge depended a lot on if you were selling a home or buying one. Homeowners saw the average home prices skyrocket nearly 20% through the third quarter compared to a year ago, according to the Federal Housing Finance Agency. It was the largest annual home price increase in the history of the agency's house price index. And in some hot markets, the price increase was double that. Homes also sold at a record pace, with sellers often fielding multiple competing bids and all-cash offers. Even homes that were disgusting or burned out sold quickly, and at amounts that were well over the asking price. For buyers, it was a different story. While mortgage rates kicked off the year at record lows, it was difficult to even find a home to buy. Inventory of available homes reached an all-time low early in the year and competition was extremely stiff. Economists told Insider News in July that 2022 will be an easier time for prospective homebuyers. New signs suggest that the forecast is holding up. 2021 has been among the hardest in history for American house hunters. A scarcity of available units powered bidding wars and drove prices higher at a record pace. Builders were slow to shore up supply. While the broader economy healed, housing became less and less attainable. New data signals the chaos of the 2021 housing market is giving way to a more normal buying environment. And while economists expect prices to keep soaring next year, signs point to 2021 serving as the peak for the housing market frenzy. Even bidding wars are slowing down. Redfin has been keeping a competition index from its own real estate professionals' data, and 59.5% of home offers faced competition in November. That might sound like a lot, but it's the lowest in 11 months, down from April's high of 74.6%. In general, homes are still selling at a blinding pace. The average time homes spent on the market fell to 47 days in November, down from 57 days the year prior. Although the measure is swinging higher as the market settles into the slower holiday season, homes are still sold faster than in any November in recent history. Realtor.com said, "Inventory might be bouncing back, but it's not rebounded enough to normalize the market just yet. Buyers will have to wait a little longer for home shopping to cool down, but 2022 should be a better time to buy at last. As interest rates go up, you're mostly likely to see more slow offers. This equates to a drop in buyer demand and an increase in inventory. Obviously, this means a housing crash is not going to happen at all. What it means is a market slowdown in the second half of 2022. So what does a slowdown even mean? Instead of getting 10 offers on a home, you get 2 or 3. Instead of exceeding the asking price, they'll just stick to the original one. This does not mean you're going to see a huge decline in prices. However, by the second half of next year, it'll be easier to be a buyer. Mortgage rates could rise by 2022, but it could still be a good time for purchases. Rates are projected to rise a bit, but still remain historically low, while buyer demand is expected to stay strong. It will still be a seller's market in many areas, but there's still likely to be more opportunities and wiggle room for homebuyers. Home asking prices have decelerated in the second half of 2021, with median listing price growth slipping from a peak of 17.2% in April to just 8.6% in October, she said. Sales prices have slowed somewhat, but not yet as rapidly. Good news for those on both sides of a real estate transaction. Jason Galios, a realtor in southern Michigan, said the 2022 housing market will continue to transition to favor home buyers while prices stabilize, but remain strong. A housing crash isn't going to happen until there's a huge increase in supply. At the moment, we're millions of homes short. Until you see homes that are built and no one's buying it, a housing crash isn't realistic. Only time will tell how the real estate market performs in 2022. Hopefully this video gave you something to think about as you start making plans for the new year. As usual, like and subscribe to help us beat the YouTube algorithm. Thank you so much for watching, and we'll see you on the next one.